All right, following yesterday's new record high in gold, it starts to pull back today. But before we get started, a quick word from our sponsor. This video is brought to you by FXEmpire, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for gold. So, you could see gold broke out to a new record high a few days ago. Closed strong. It kept going into yesterday's new record high at 2005.90. And then today we have a lower high, we have a lower low, we have a drop below yesterday's narrow range day, the first pullback since the breakout. So we would like to see, from a bullish perspective anyway, support found at or above the breakout level, which was 2005.32 right here. Alternatively, the purple 20 moving average offers some significant potential support at 2005.20. You can see how it was tested on multiple days recently, and it held roughly the whole time and all the way back down here. So this should be a trend indicator that holds as support if it is tested and approached. Notice that it's joined by this internal uptrend line. So we have those two lines together and they're just about to converge. If by chance the 20 is broken, then we're looking at potential support around the 50, which is down here at the top of this symmetrical triangle breakout at 2004.66. On the upside, a rally above today's high, 2005.87, has gold heading into the next target zone that ends at 2006.05, and that 2006.05 completes the target for the symmetrical triangle. So we measure this height of the symmetrical triangle, attach it to the breakout level. That gives us this 2006.05 as a target. And then there's also this rising ABCD pattern extended by the 127.2% retracement. And then, of course, there's higher levels with that. That's those levels for now. Let's see what happens next. We get more of a pullback or we get a continuation of the breakout in the near term. Okay, that is it for gold traders. Have a great week. All right, we got natural gas going to a new trend high, but then pulling back. But before we get started, a quick word from our sponsor. This video is brought to you by FXEmpire, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for natural gas. You can see we already completed the 38.2% retracement, and it's attempting to go higher. It went higher today, but now has pulled back and is trading near the lows of the day. This means a deeper pullback may be coming, and that opens up the possibility of a test of support around the 200 moving average, the blue line, at 224 or above that. So the 224 is in a 200 moving average is critical at this time, short term, because natural gas broke out above it, moved away from it, and now this is the first pullback potentially to test the 200 as support. Now we had an interim one-day pullback here, but that's now we're looking at a deeper pullback, a wider pullback that covers a longer time frame. So that's the first level. Second level is down here at 218 to 216, which is the purple 20 moving average and the orange 50 moving average, respectively. However, the expectation is for a continuation higher as we got a double bottom breakout last week, decisive in that the rally continued, including into today's high. That increases the chance that we're going to at least test this next higher target zone and maybe some of these other top target zones. So the next target zone is anchored by the 50% retracement at 252 and includes a standard rising ABCD pattern, ABCD, at 2.54. That is where there's symmetry between price movement in the two swings, and that's where we have a potential significant pivot, i.e. potential resistance. So that's the next resistance zone is up there, and then higher up The next zone starts around 2.65. Okay, that is it for natural gas traders. Have a great week.